Greg Womack, whenever you're ready.
Okay. Well, we had a great Greek revival last week. Equities after weeks of kind of a long downdraft, we had straight 5 days of fireworks, something to celebrate about. Dow had triple-digit gains in all but one of those days, and the global Dow gained more in a single week than it did the entire first quarter. So a lot of momentum. The volume was average, nothing for fireworks in that department, but we hit some key levels over the last few weeks on support levels, and they have bounced up since. So pretty much, the Dow Jones for the year is up about 8.6 and 6.5% on the S&P. Of course, Treasuries took it in the shorts last week because of the stronger market, and the fairly decent news in the economy was push interest rates a little bit higher. But the big news was the Greek Parliament approved that $78 billion euro package of budget cuts, tax increases, and asset sales, and the austerity measures that were needed to forestall a default on the country's bonds. So temporary fix there, a little bandage on the wound. So for right now, we'll take it. And whether they signal better things to come or simply start of a traditional home buying season, we did see home prices slightly increase. It was the first increase in 8 months. Of course, they're still very depressed since the peak back in 06 and 07. U.S. manufacturing did go up in June, rising 1.8%. New orders, production, inventories also rose during the month. 23rd consecutive month of expansion in this sector, according to the Institute of Supply Management. And then, construction spending fell slightly in May and was 7.1% below that of last May. French Minister Christine Lagarde was named to replace Dominique Strauss-Kahn as Managing Director of the International Monetary Fund, which plays a key role in the international assistance for Greece. So really kind of looking ahead, John, after last week's strong gains, the possibility of some profit-taking can't be ruled out as traders return from the holiday weekend. Then we have the latest unemployment data on Friday. It will be of interest, and the European Central Bank will meet on Thursday to decide whether to raise interest rates. Then we have some factory orders, reports, U.S. service sectors on the 6th, and unemployment payrolls on the 8th. And as Dirk mentioned, we're kicking off the earnings season, and should be a fairly good earnings season's reports. So here again, you look for a little bit more momentum since the markets have found technical support, but you can't rule out any catastrophic event in the event we don't raise the debt ceiling. In the event we do raise the debt ceiling or don't do it in of course, technical default. So as we've talked about all summer, John, sell in May and go away. It was almost sell in June and sing a different tune. But you basically keep your sell stops pretty tight. Review your charts and look for your support levels on your prices. And if you, like Dirk said, if you want to be a little more cautious, it doesn't hurt to have a little bit of insurance.